Good afternoon, good afternoon, good afternoon. This is the Steve again. Tonight, what I'm going to talk about is the qualified business income deduction. This is part of the new tax law changes, which is due to expire in the year 2025, from what I have researched. Now, the definition of a qualified business income deduction is the QBI deduction allows certain business owners to deduct up to 20% of their business income from their taxes. Pass-through entities such as sole proprietor, partnership, S corporation may claim the deduction through extra restriction applied to owners of service businesses like doctors, lawyers, and accountants. Now, I do want to point out too that if you have a farm, maybe in Oklahoma or Kansas City or deep down Virginia, and then when you do the Schedule F, they qualify for the 20% business income deductions, as well as a state return. So if you do a 1041, you can deduct the 20% of the income as well. Now, if you're one of those real estate investors, like for instance, if you with Fundrise, when you get the 1099 dividends, you can take the qualified deductions, business deductions as well, which is a different topic. And I may go ahead and maybe do maybe a 2-minute presentation on that and see how that works. Now, depending on your on your profession, you can you could qualify for the SSBT or not SSBT. And if you have more than one profession, you can qualify for both. Now, here is the following professions under the SSBT. You get health and service, accounting and investments, consultant, legal services, athletics, performing arts, and actuary services. Now, anything outside of this, it'll be a non-SSBT, which is rideshare. So if you're a Doordash driver, it'll be a non-SSBT, childcare and restaurants. Now, if you decide to do the tax return yourself, make sure and you're self-employed or you do Doordash, and if you profit for the income or you do the return yourself, be sure you find make sure you find the information about the qualified business deduction, which is the QBI, and as you go through the questions, it's going to ask you for whether or not if you're SSBT or non-SSBT, specific business or non-specific business, and it'll ask you that question. So be sure to look for that carefully. And if you decide that you want to talk to a tax professional like myself, to do the tax return, hold them accountable for it. Make sure make sure they give you that qualified business deduction. Make them look for the question on their software if they don't know what to do, because a lot of times not everybody don't know everything. So here now the difference between the SSBT and non-SSBT. Another thing is that the income limit may be extended, and I'm going to show you that next. Now, before I do that, I'm going to go ahead and do my usual warm-up exercise. Okay? Now, the question is, which of the following professional is not considered engaged in a specific service, trade, and business, which is the SSBT? And we kind of went over that just a few seconds ago. Now, here are the choices here. I'm going to go through the answers, each of them. Now, professional baseball, that's the SSBT. The veterinary, I can't pronounce it, is part of the SSBT. Divorce attorney is part of the SSBT. So all of these three are, except for building engineer. Building engineer is part of the non-SSBT. Okay. Now I'm going to show you the calculation of an example if a Doordash driver receives an income. Now, this presentation is not only for Doordash, it could be any self-employment owners as well as a sole proprietor, so or any business owner. this presentation is for them as well. Okay, now the next thing here we are. Now I'm going to do a calculation with an SSBT. Now, if you are a Doordash driver and you receive $30,000 and you get that 20% deduction, so if you take 30,000 times 20%, 6,000 is your deduction. Now, I wouldn't get too comfortable for it because because there is a trick to everything, but I will show you that towards the end. Now, here are the income thresholds. I'm going to use single as an example. Now, this is the deduction for $6,000 based off of this income here. Now, anything after $160,700, this deduction here will phase out, meaning it will decrease. Now, if you have an income that reached over $210,700, there's no deduction because it's simply that you make too much money. Now, if you are a non-SSBT, as I stated previously, your income limitations may be extended. For example, we know with the prior example is $30,000 Doordash income. It's 20%, so that's $6,000. Now, if it's if it's after the $160,700 for a single person, and it's between $210,700, this deduction here will be reduced, meaning that's going to be phased out. However, if you made more than this, the income limitation threshold ranges will be extended, and this is how it is. Now, if your income exceeds this here, then you have to pass this test here, which is called the wage and property limitation, where it's going to be the greater of one of these two here. So you're going to have to, do the calculations here. Now, it's going to be it's going to be the greater of 50% of W-2 wages. Now, the W-2 wages is when if the owner or the self-employment owner pay the wages to the employees. That's basically what that is. So it'll be 50% of the W-2 wages or 25% of the W-2 wages that you pay to the employees, plus 2.5% of the unadjusted basis immediate after the acquisition. So basically means, there's another topic of that called basis. So basically, what that means, for example, let's say you bought a computer for $300, which is the cost, and you did some upgrade, like you bought some speakers or something, and you pay maybe like $200 for it. So your adjusted basis will be $500. So that's basically what that is. So once you do this test here, do this calculation here, it's going to be the lesser of the two. That's lesser of the two. Now this is for profession, a non-SSBT profession, like Doordash, for example. Now I'm going to do a true calculation of the QBI, so you can see the whole picture here, okay? And this is where the tricks are going to come in. How to calculate the QBI. Now, you have the Doordash income of $60,000. So you take the 20% of that, which is $12,000. The standard deduction for a single person is $12,200. Now, if you don't understand, the difference between standard deduction, I did do a YouTube video on that. You can go ahead and check that out. So if you take this, subtract it from here, this is your taxable income. Now, here's the trick here. It's going to be the lesser, the QBI deduction is going to be the lesser of the taxable income or the actual income itself. Okay, so you take the $47,800 times 20%, which is $9,560. So the lesser of these two here will be $9,560, which is your QBI deduction. So you take that deduction, subtract it from here, and you're going to pay taxes on the income in this amount here. So this is how you calculate your QBI.